Okay, a quick look at CMCX and more importantly, why we avoid this type of breakout scenario. So, we have a lovely little base on CMCX. We have a nice defined breakout level. We've got a nice round number there, 300. Zoomed in. I'd take that scenario all day long. I've been sat in the seat for well over a decade trading primarily breakouts, but not all breakouts are the same. So let's just zoom the chart out. Job number one of charting is look at the big picture first. Straight away, I can demote this breakout opportunity to the bottom of the breakout pile. We are bottom fishing in the breakout area. First things first, I'll just go to share scope. Lessons from the trend, part 1 from 2020. This is the articles I've done for ShareScope are like a course in especially trend following or riding for price appreciation in stocks. And don't miss the first part either, the lanes of investing. But have a read through this and it will talk about these levels in detail more than I could do in this video here. Obviously after you've finished listening to this video, and obviously after you've liked and subscribed. So, not all breakouts are the same. If you look left and see a huge trend, you've missed a huge trend. Another big point here. What did this stock visit last? 52-week highs or 52-week lows? 52-week lows. We know that this stock is definitely, in a correction for that visit to be 52-week lows, the last visit. Could it be bottoming out? Well, we know that it's got recent supply. So if it was bottoming out, yes, stocks can recover from this area. For me to look closer at a breakout scenario like CMCX, I would always, as I always do, I do my fundamental case. Half of the job is for me is riding growth stocks, and that is fundamental. So let's just jump into the fundamentals of this stock, and I will just note on the day of it hitting the screens, my point of view was we have results in a couple of weeks. These forward numbers, and this is what I showed in the forward numbers. This is what CMCX is trading towards. It's got some awful numbers to get behind it. Now, CMCX was forecast on the pre-tax profit 80.6 million. It actually beat. So this was a beat. This reaction was actually a beat on the pre-tax. Have a look at all the other numbers, make your own mind up. But it went through, it did beat. We've got the post-earnings sickness. And the key here is just to try to think like I was thinking on that day when we saw it, And one of the big problems is, when this is getting pumped in the boiler rooms and the social media, because this was a nice looking base, nobody mentioned the forward numbers and what I had to get. We talked about it in our chat group, we talked about it in the live screening. That's not a scenario I just want to take on. Let the numbers post, see where they're heading next. So, you can do this in ShareScope. We knew they were awful results, didn't we? It's gonna be, we haven't got the forward numbers in yet. Let the post-earnings sickness just play out, and then some people might be asking themselves, why is this recovering when the earnings are so bad? Guess what? The market looks forward. But first things first, if it can't make my screens again, if I don't see it in my screens, it's not rising. So next time I will evaluate this stock is when it hits one of my screens again. If it hits one of my screens again. I'm sure one day in the future it will do, but could it be in the next few months? Could it be in the next 5 years? Nobody knows. So, do not sort of just blindly follow people into these things. Know your fundamental case, know your technical case. And this one, in the pool of stocks we have to find breakouts in, this one is an F minus. It's one of the worst breakouts you could take on, really. Hope it helps.